Welcome to the Pacesetter Pod, where we explore and reveal the perspectives, insights, and approaches to deliver great results and growth in your agribusiness through better execution. Here's your host, the Integration Pacesetter, Joe Mosier.
Welcome, Pacesetters of Agribusiness, to another episode of the Pacesetter Pod. I'm your host, Joe Mosier. Thanks for joining us today. Hey, a real quick reminder before we jump into today's episode. If you haven't done so already, now is a great time to subscribe to this podcast and ensure that you never miss any of the content or conversations that we publish each week to help you deliver better results in your agribusiness through better strategy execution. Now, for today's episode, we are talking with Jase Wagner, President and CEO of Compeer Financial, a member-owned farm credit cooperative serving and supporting agriculture in rural communities. Compeer provides loans, leases, risk management, and other financial services in 144 counties across Illinois, Minnesota, and Wisconsin, and has more than 1,400 dedicated team members to serve their over 70,000 member owners. Now, a few reasons I wanted to have Jase on the show that you're going to hear come through loud and clear in the interview. Jase is someone who's rooted in history, but suffers no lack of imagination for the future and what it might hold, which is always a really energizing and magnetic personality trait to be around. He really thinks about the impact beyond the financial statement and results and the expansive role for farm credit in investing in rural America, which is a topic that is near and dear to all of us that operate within agribusiness. He's got this creative approach to collaboration and really encouraging his organization to create spaces for that collaboration to occur, even when how it might manifest and who might benefit from that collaboration is unclear. He's a student and a champion of culture and is very clear-eyed about all the risks and rewards that it entails depending on how you handle it. And he'll help you understand what he's seen at Compeer Financial and through his career when it comes to culture as a real accelerator or, frankly, a constraint to strategy and strategy execution. And lastly, I really appreciate how Jase is reflective on the lessons learned that he experienced in a tri-party merger and, what they got right, what they missed, and probably even more refreshingly, what they never could have anticipated in terms of the opportunities that M&A creates. And again, all with an eye towards leveraging those lessons learned, codifying them, and then plowing them back into the business in service of doing better and different in the future. And so with that, let's get over to my conversation with Jase Wagner of Compeer Financial. Jase, it's good to see you this morning. Welcome to the Pacesetter Pod.
All right. Thank you, Joe, and looking forward to our conversation this morning.
Fantastic. Well, before we talk, there's a lot of things that I want to talk to you about. And as you and I know, but for the listeners, you and I had a chance to meet earlier this year at an event that Compeer hosted for folks across agribusiness, which I think we'll talk specifically about that, but also what that signals for the organization. But before we get into that and we get into topics of culture and M&A and the down cycle, the commodity cycle that we're in, let's start off with who Compeer is. So talk to us a little bit about how Compeer came together, when that happened, and who you all are as a company today.
Yeah, so Compeer is a accumulation of a number of mergers over a long period of time, but most recently in 2017, there was 3 organizations that came together from Northern Illinois, most of Wisconsin, and then parts of Wisconsin and Minnesota. So AgStar Financial Services, Badgerland, and First Financial Services were all combined together. So there was 3 people. It had a unique merger from a 3-way merger, was certainly unique. But today we are $36 billion of loan volume. We serve about 70,000 farmer clients across those 3 states, Minnesota, Wisconsin, Illinois, and really even broader than that across much of the Midwest. And we have about 1,450 people that we employ and really spread across about 42 locations. So a pretty broad base, a pretty regional powerhouse. And that includes, a really diverse portfolio. Obviously, corn and soybeans is a big part of our portfolio, but it includes, dairy, a large swine operations, as well as, some unique things around some of the cities, like nurseries and pumpkins and things like that happen in the different parts of our geography.
Yeah, so that's just one of the questions I had, because when we look at Compeer's publicly available information, it talks about a real focus not exclusively, but a high focus on Minnesota, Illinois, and Wisconsin. So that really is a legacy of the organizations that came together here about 5 to 7 years ago or so.
Yes. So the kind of home base of those operations was in those dedicated territories. We are a farmer cooperative, so we are a member of the farm credit system as well. And our farm credit system, each county is ascribed to a specific farm credit entity. So we have 144 counties that are ascribed to us, where we have an effective exclusive license among farm credit to operate and work together. So when we came together, we were geographically complementary. We also had complementary portfolios in many ways, and a really strong culture across the group about customer service and really aligning around that client experience, trying to help them achieve their dreams.
Certainly. One of the things that I was struck by, and I alluded to this earlier, and one of the reasons I was really excited to have this conversation with you is that my read on Compeer, and these are my words, not yours, but it feels like you all are really trying to be creative and perhaps even reinvent what it means to be a farm credit partner. And so the reason I say that is, of course, you hosted an event in the Twin Cities in January, a weirdly nice, warm, sunny couple of days in January as well, that brought together, of course, members of your organization, other lending institutions, banking institutions, and your partners. Members of your board were there, members of the ag tech community, advisors, content creators, et cetera. Just a broad and diverse group of people were there to talk about ag tech at the cutting edge. And what struck me about that was, while clearly it's a headline event by Compeer, it was also very much about creating a space for conversations, right? So it was an intimate gathering.
Yep.
An agenda that served a lot of different interests, but there was ample time for folks just to connect. And so it felt like you all were really investing in creating spaces for conversations and innovation outside of what you might see in a press release. And so I guess, without making this a commercial for Compeer, that was my read of it. But is that reflective of trying to rethink what does it mean to be a farm credit partner and try to meet new needs? Or what are you looking for in the future and what you're trying to create at Compeer?
Yeah, the genesis of that, the conference and the conversation, as you put it, which is really the intent, was seeing the continual uncertainty within the overall market. And it starts maybe at the farm, but it also includes retailers, lenders, and others that are trying to access the market. And then bringing in the ag tech world, which is trying to help solve some of those problems in maybe different ways and in different ways of partnering. And so creating the space around that was a learning opportunity for everybody in that room, one way or the other. Oftentimes you go to something, you're like, well, I kind of know what they're going to talk about, so let's see what others' opinion of it is. This is really truly learning how different people are connecting many of the groups in the room. So how do you connect to a bank? How do you connect to a farm credit? How do you connect to a retailer and to a farmer? And so the conversation, we didn't know where it was going to go. And I think that was a really healthy part of it, is trying to convene a conversation around what's going on in the market, how different individuals may be able to help, how some of the technology is evolving that may help these connections be easier. If you look at ag retail as an example, a lot of different ways that are going market. You have service providers that are coming in, which are helping them connect both to the farmer in a more digital way, but also I think will allow sharing amongst the retailers themselves and allowing that to facilitate and be much more efficient as well, whether it be payments or whether it be processes, those kind of things that are working together. So definitely a way we think about the world as well. So our vision is a world where agriculture and rural communities are dynamic, collaborative, and thriving. And so we're trying to create this team aspect, this collaboration, which is, part of our brand values, not only within just our little industry, but really more broadly around the market. And we think that that's the best way to have healthy and thriving rural communities. It's the best way to have a healthy and thriving ag environment. So I think creating a conversation, creating a space for that is a very intentional way of creating a collaboration across these streams. Ag is a very independent streak. I'm going to go do this and I'm going to go do it largely by myself or with certain partners. I think the world that we live in is going to require that we operate across a broader spectrum and really learn to collaborate in ways that can be mutually beneficial. And so that's really the intent. It's a belief that we have. in order to be successful in the future, you're going to have to continue to collaborate. So this was one way to get that conversation started. And we really enjoyed having everybody there. We think it's a way to kind of keep it moving and help advance the thinking overall.
Yeah. And I think one, thank you for doing it and having the foresight to create that kind of space. I think it's instructive for a lot of others, whether they're lenders or not. Banks are uniquely positioned as gatekeepers because they've got close, intimate relationships, intimate knowledge of their counterparties and their clients, but they control a lot of those relationships, and those are also rooted in trust. And so there's a lot of opportunities to connect people or choose not to connect people. And I think someone like Compeer using that positional advantage in the ag value chain to say, you know what, we're not going to have all the knowledge be proprietary to us. We're not going to do this as a bilateral exchange of information. We collaborate with these people because we talk one-to-one. No, we're going to put a lot of people we have access to in a room together. And we're going to participate in that knowledge share, but we're not going to necessarily control it. And we don't know where it actually manifests in terms of new businesses, new partnerships, new value creation. But having that, again, that expansive idea around how do you support collaboration across our industry, I think is really important. And it's not just lenders that have the opportunity to do that.
Yeah.
I've seen ag-focused PE shops, which are sort of, lending adjacent, but they're more investor mindset, where they have done something perhaps a little bit different. They might be talking their book a bit, but they have a chance to bring people together. You certainly see a lot of software and ERP vendors will look to bring customers and prospects and other people in. Clearly, state level associations do this as well. But I do think when a company that has a lot of connections into the industry sort of, again, tries to say, look, this is going to be a multilateral collaboration that we're going to be at the table for, but we don't exactly know where it goes and what our participation will be. I feel like that can only be, good karma coming back to you at some form in the future. Yeah. Even if in the near term, it's an expense outlay and you don't know what the ROI is over the next couple of quarters.
Yeah, I think that's true. I think we think of the world as a world of abundance, right? So if we make connections with individuals and they end up doing something wonderful, that there will be a way that comes back to us, either in their ability to, maybe it's a person that they recommend to come work with us, or maybe it's a client that they're working with helps us in a different way versus just hard dollars. So I think when you make connections and you allow those to happen and occur naturally, is there potential for competition? Absolutely. But I don't think that's the world. Again, there's a lot of abundance out there. It's not a zero-sum type of game. And so I think if you create opportunities for the market and you do good things and you show up in the way that we want to show up as an institution, but also just as a group within rural America, I think that's really what we're looking for. And it'll create new opportunities, new ways to do business, and maybe hopefully ends up helping our clients. But our clients, again, are farmers and ranchers across the Midwest. And if they get benefit in a different way, that's still an okay thing for Compeer. We're secure in the fact that we have a good business, then we're going to continue to excel into the future anyway. But if we can help other things happen, that's really where that special sauce really starts to take over.
Yeah, that makes a lot of sense. Well, I'm really interested to also get into, your perspectives around what you've learned over the last number of years that you've been in your role, and also over the course of your career. And so it's all kind of in service of this idea of sharing knowledge, sharing perspectives, and having that more expansive impact on our industry of agriculture and agribusiness. So, but before I start to pepper you with individual questions on your learnings and experiences, give us the Jase 101, your current role, how you came into that role, and maybe some of the highlights of your career to where you are today.
Yeah, so I am the president and CEO of Compeer Financial. I've been in this role since the beginning of 2023. Was the chief financial officer for 7 years before that with the organization and with the predecessor organization. So spent a fair amount of time within Compeer, but born and raised in eastern Montana. So I'm an ag banker son. So my dad was an ag banker, worked with many farmers and ranchers out in the eastern Montana area and really across Montana and South Dakota and North Dakota. And so born and raised in and around ag and did that work. I went and sports were a big part of my life, have been, and really influenced a lot of how I think about culture and winning and collaboration. But after kind of spent my initial career doing a tour of duty in corporate finance, so worked in accounting, worked in investment banking, worked in some private equity worlds, as well as the hedge fund world for a period of time before coming to the Compeer organization and really feeling like I came back home in a lot of ways. And so today it's a diverse role, kind of helping people succeed in many different ways. I call myself a little bit of the chief storyteller. I get to tell the stories of our team. I get to tell the stories of our clients. And I get to tell the story of our cooperative, really Compeer. And that's a really impactful way to try and make a difference. Telling that story allows people to connect with what we're doing and how we're doing it, and hopefully develop those relationships which build into lasting value for all of those parties.
Well, my next question was going to be, how does a president and CEO of a regional farm credit bank spend their time? But I think you just answered that in terms of story hour. So I imagine quite a bit of time outside of the organization as well, interacting with different groups and counterparties and associations and advocacy groups, et cetera, within the industry.
Yeah, so I think there's several different ways. Obviously, the internal time and managing our own risk and really working with the team to get the things done we need to do on a day-to-day basis. But really working across farm credit entities too. We have a lot of collaboration within the farm credit system. How we work together to solve client problems. We do that really, really well. But increasingly, trying to spend more time, expanding our understanding and influence across a broader set. We have some work going on and sponsoring some bills on investing in rural America. So trying to increase the farm credit ability to work with rural community facilities. So think about nursing homes, hospitals, libraries, fire stations, those type of things which need funding and increasingly need more funding. So I'm spending more time kind of advocating on behalf of rural America and our clients to try and move some things along to try and really have an impact over a long period of time, both in the rural communities that our farmers and ranchers are in, but also in agriculture.
Yeah, I'm happy you said that. So I'm guessing there's some regulatory or legislative constraints placed upon your ability to help underwrite or fund some of those things, but it speaks to how interconnected our small communities really are. So we talk of a lot in our work with clients, of course, who are consistently going through a process of asset rationalization, right? And saying we perhaps don't need an elevator every 3 miles anymore. We probably didn't need an elevator every 3 miles 10 years ago, but here we are. And so, but it's a very difficult decision because when that elevator closes, it's easy to sort of pencil out and say, well, that's 2 or 3 jobs that'll get moved to larger other elevators that are not too far away. But of course, you do have that small community that does business around that organization. So the hardware store, the coffee shop, the gas station, et cetera. And then also the rural community facilities, you said the nursing homes, et cetera. And so I do think it requires us to think creatively and think responsibly, not just making the specific business decisions, but also what's the knock-on effects within those communities. So to the extent that you can, what would a more creative or innovative approach to allowing the farm credit system to participate with and underwrite and fund some of these rural America investments look like in your mind?
Yeah, so we've been doing this in part and kind of through a pilot program since 2006. So we have almost 20 years of experience. We've done over $1 billion in projects. So we have a pretty good idea of how these things come together and really how we can have an impact. And the Investing in Rural America Act, which is sponsored by Michelle Fishback, is highlights this. And it's really allowing farm credit to invest in specific types of high impact facilities. And we would do it in partnership with local banks, in partnership with local, other funders who may want to come along with us, oftentimes in partnership with USDA and others who help bring capabilities and capital and things to that local environment as well. But from the rural communities, the ones that are successful are the ones that are increasingly looking to collaborate, who are thinking about regional success, who are thinking about ways to attract, kind of this broader workforce and really support those rural communities. And so that's where we have, because if you have a hospital and you don't have housing, you're not going to have a hospital for very long because you're not going to have workers that live there. And so I think what we continue to find is whenever you work into a rural community, it is connected, and those knock-on effects are very important, both from a positive perspective and what you can create, but as you have outlined, kind of the negative side of that too, does occur as we have it. But you have to have people that are working together that are thinking about creative ways to make something happen.
Mm-hmm.
That's usually bringing a coalition together versus trying to do it all by myself and think that I can make this happen independent of the market forces that are around them.
Yeah, certainly. Do you look at this? I'm very curious about this topic, and I will confess my ignorance if it doesn't become clear with my next question. But do you look at this as, is it typically constrained by a lack of imagination or a lack of understanding of the opportunity that comes with making these rural investments? Or is it just the nature of multi-party investment collaborations that, for a variety of reasons, can get pretty bogged down before they actually matriculate through into the community?
Yeah, I think probably the biggest hurdle that we face, a little bit of the lack of imagination of how we can work this together more in a regional basis. I think there's the sunk cost of the existing community that you have in an area or police force or whatever it is, that doesn't allow them to think, hey, if we just did this together, it might be better. It might have more jobs, better benefits, a better hiring environment, a place to excel as a individual coming into that local community type of area. So I think that's more often what we see. The capital is there in part. I think to the extent that we can get momentum, we would fill that capital hole relatively quickly.
Mm-hmm.
It's a really large number. So it's $10 to $15 billion gap in funding per year accumulating every year. Many of these facilities, if you've been in a rural town, the nursing home is probably from the 60s or 70s and needs to be upgraded. And so we are looking at and finding ways to partner and really collaborate with a broad set of individuals. They might be agribusinesses. They might be wealthy individuals in those communities. They might be just the mayor and the city council who are really looking to make a difference and really move forward. That's where we typically have that intersection is where we really have a lot of success and have some, have changed the direction and the trajectory of rural communities. So it's fun to see when it works, but it is definitely getting over that existing way you've done it, which
Mm-hmm.
is true in almost every business, right? You have to stop kind of thinking that the way you've been done it is going to help you succeed into the future. And if you start thinking a little differently, and that starts with having conversations with others who are doing it differently. That's why we believe in this collaboration and bringing these voices together to have that long-term impact. It'll open up your mind to a new idea, a new way of doing it, new connections, and that creates the opportunity to then have that success well into the future.
Well, and on that well into the future comment, I mean, this is about playing long-term games with long-term people, right? Because these are not investments that pencil over 6 or 9 months necessarily. And, we talk in ag exhaustively about the labor constraint problem. We have labor challenges across the country, but they're more acute in high manual labor jobs, that are exposed to the elements, and especially when those jobs exist in communities that are already underpopulated because there's been a lack of opportunity, or frankly, just there's a declining population or aging population, generally speaking. And so when we think about a feed mill or a flour mill or a seed company or a co-op, whatever it might be, and their increasingly challenging environment around finding, hiring, and retaining competent people that reflect their values and do work the right way, a lot of this is a knock-on effect of things like, the schools were insufficient. We had to move away. We had unique healthcare needs in our family, and we couldn't afford to drive an hour and a half 2 times a week for appointments. Grandma needed assistance that we couldn't provide at home. And we are unwilling to also have her deposited 120 miles away and see her on the weekends. And so you need to think pretty broadly about what does it mean to build a sustainable community, frankly, also just to solve a business problem.
Yes.
You got to have people that are going to, work in your business. And so I think that's really important work.
Yeah, we think they're so linked, right? In order to have the labor and the people that you need to succeed on the farm, even though you might be independent, you still have to have people that support you, welders, plumbers, those kind of skilled technicians, or people that work at the co-op, people that work at the FSA office. All of those things are really important to your farm operation. And so how can we create a community? They don't want to drive an hour, but they might be willing to drive 20 minutes, right? So how do you create a community within a reasonable area that has housing, that has good off-farm jobs, so that you can continue to farm in part-time or with your brother, or supporting your aging father or mother? And those are the type of things that, if you have a really healthy rural community, you can really create a dynamic environment both there and with that ag environment. So that's why we think they're so linked. We have to support kind of both parts of this equation. And we're really encouraging a broader set of people to think about it in that way, because that's how we create these long-term sustainable communities and operations, and really create that vision that we're looking for of a dynamic, collaborative, and thriving rural community.
Poorly executed mergers and acquisitions destroy more value than they create. They can set your company back years. To defend your firm's position in the marketplace, you need access to the leading practices that unlock the greater potential of your people, processes, and systems. If you are undertaking a company transformation or pursuing an acquisition as a vehicle to grow, set up a call with Joe by visiting www.moshercg.com.
Let's shift gears here, though it's all going to continue to pull that thread through around collaboration and creating the vision for the future. When I saw you speak earlier this year, your topic was really around culture, which is always interesting because, lots of people talk about culture, but not everybody can actually explain what culture is. My bias was, I think you actually did a pretty top shelf job of making culture feel real. So I think it'd be good to have our listeners benefit from that as well. When you think about culture in the organization, what is it? And an obvious question, but something we should also hear from you is why is it so important? And then a follow-on question to that, beyond what is it and why is it important, is what have been your observations around how a strong culture, when you have it established and working, actually moves the organization forward and helping you accomplish the objectives for the organization?
Yeah, great. So it's a great question. It's something I'm pretty passionate about. I've lived in some different cultures, some good and some very bad. And so I've been able to see how it can translate over time. But we'll start with the definition. And it's really a collection of shared beliefs, values, and behaviors that define your organization. And so it's, if you think about that, shared beliefs, shared values, shared behaviors, and you'll see that when you walk in. It's a feel that you get when you walk in an organization. Do they show up at the door and say hi and thank you? That's part of your values. That's how they show up. And I think that's part of your culture. I think where we have seen is trying to be more intentional about managing it. So culture is a part of your organization, whether you choose to manage it or not. And oftentimes, I think individuals who are coming in or just been part of an organization for a long time tend to take that for granted. This is just the way we are, and that's the way we operate. Well, it got there maybe in a good way, but if you don't intentionally continue to manage it, then it will go whatever direction it may occur, right? You may have a new leader come in and he or she may totally change the culture within that office. You hear about that quite often. So we have been trying to be more intentional about what we're seeking for the whole organization. And it's obviously, each individual area or a client interaction has some uniqueness to it, which we believe is also part of our culture. But it shapes how our teams see their work and their place in the organization. So when they come in, are they feeling like they're supported? And are they feeling like they are ready to serve that client and try and go the extra mile to serve our client? And that's one of the things, and collaboration is one of those things that's part of our culture. We're asking questions of others, and they are expected to give their opinion back and listen to each other back and forth. That is something we are actively trying to continue to work on. so that you get that dialogue, you get that collaboration, because that will generally lead to a better overall outcome for whatever stakeholder you're serving. And so I think that's one of those things that we see as you go through uncertainty, as you go through tougher times, which we may be headed in that direction. It really helps us lean back on those. I know that if I'm struggling, my partner next to me is going to help me out, and we're going to help our clients out, which you oftentimes see on the farm, an injury or something that happens and others, neighbors show up and really support that operation. That's consistent with the culture that we're trying to create across our organization. But it boils down to some of these behaviors that we were talking about. And so if you think about the dynamic environment we're in, is that how do you prioritize your time and effort across a large number of things that are coming at you every day? And so that is a behavior that we're looking for, and something we're coaching our leaders up on to consistently ask, like, what are your priorities? What are you working on? And that will allow us to move faster in this environment, solve client problems faster, really help us. We closed a loan in 6 days the other day because of some market volatility. And that was, they didn't think they were going to need a loan. All of a sudden, the volatility hits, they need a loan, and we were able to work through that in 6 days. And so that's an amazing way to serve our clients. But if we weren't prioritizing, if we didn't think about that and it just fell on the pile, we never would have gotten that done. So that's where culture and that attentiveness to clients, that willingness to work with each other to solve problems, shift work among each other, collaboration really adds value to that client. It helps us get more business and really kind of drive that performance into the long run.
Yeah, I mean, that example there of closing the loan in 6 days and unanticipated
Yes.
lending requirement, lending need doesn't, someone could point to and say, well, we have the most efficient workflow in the industry. Well, if that was true, then the 6 days wouldn't be something to really celebrate, right? Because you'd be churning out the loans as quickly as needed, and that wouldn't be a differentiator. It might also lead to a pretty risky book. But, the idea that adaptability and listening, and there's something you said up front that I think is really important, about the idea of continuing to manage it. Because a lot of the conversations, and on this show as well, we talk about, defining the culture that you want, living it out, being the example, and helping to establish it, but the work is never done. It's kind of this idea that, the culture didn't just happen to arrive here, nor will it just stay here on its
Correct.
own. It will,
Yes,
it'll atrophy, it will evolve into things that you do not want it to evolve into. And so I imagine that as an organization grows, though, Jase, that becomes more and more challenging because you've got more and more stewards of your culture out in offices that you don't interact with, deeper in the organization than you can spend face time with, people you maybe don't have relationships with. And so what have you learned about continuing to sort of manage that culture in an organization and an environment where it just becomes more challenging? We are no longer place-based work.
Correct.
We're distributed everywhere.
Yeah, so part of Compeer's culture is we are out on the farm. So we do an incredible amount of work at the breakfast table of farmers and ranchers every day. And so not only do we have people spread across 3 large states that end to end is probably 20 hours across our territory, we have a hybrid work environment as well, where we expect and have some people who work both in the office and out of the office consistently. And so culture is something we talk a lot about. It is something, as I talked about Chief Storyteller, I'm telling stories about how people have hit the mark on culture and how that's an important part of where we're going. We also are improving our mechanisms for performance management around some of those. If we're not hitting the mark on the culture that we need to have, then we need to have those tough conversations and really giving people the tools and the confidence to go do that as well. I think that's an important part of this is you are what you permit. And so we've been talking a lot about that and trying to understand and helping people get to the positive situations within that culture. But it is something we talk a lot about the executive leadership team as well, is how do we continually set the right example of what we're looking for in our culture? Are we empowering our people to make those decisions? Are we arming them with the information? Are we helping them level up their leadership to really continue to live out the things that we want within our culture? But it it is a continuous process. It is not something that goes away. I think we are intentionally trying to instill the regular pace to it. And so what we've seen over the last year and a half as we really pushed into this is first we saw the language being used. And second, we saw really good examples of things that were occurring to both elevate our culture, but also kind of maintain the bottom end or lift the bottom end up. But increasingly, we're just seeing it as part of how we're doing business. Are we talking about it? Where do we see good examples of it? Those are part of team meeting agendas. And that's when you know you're starting to get the rock rolling and you're starting to see that culture really take hold and really people buy into what you're talking about, because it is very easy to be a flavor of the month type of initiative. And we're a year and a half in and we're really starting to see that roll through our organization and be a consistent part of how we're doing business and how we're actively managing this culture, because we know and see it drive the results we're looking for and drive the outcomes for our clients that we're looking for.
Yeah, and anybody who's been in any sort of a management position, whether it's the top of the house or a team deeper in the organization, if you have the choice, if you're facing some underperformance within your department, your division, your business, your territory, whatever it might be, if you have the choice between underperformance manifest from poor culture or just a lack of skills, you'll take the lack of skills every single time, because that is something that's relatively easy to remedy. Culture, when it's not there, it's a bear. And so, I think there's a lot of wisdom here around define the culture you want, work at it, wrench on it, talk about it, celebrate it, correct it when it's not working, and recognize that try as you might, it is never done. You're never going to tick the box and say, culture deliverable, achieved.
Yeah,
right?
That is not something on our success list for sure, but we definitely celebrate along the way. I think that's part of it is really taking that moment to celebrate when it is working and continue to show people that that's where we want to go. It's tough though. I mean, these are people, everyone works together, but we are, of course, Midwest nice as well. And so how do we help people coach to the right behaviors that we're looking for? And really, oftentimes what we find, which is one of the hardest situations, is where we're not meeting the culture that we're looking for internally, but the client, because the client is winning or the client has been put forward as the reason for the bad, culture interaction. And I think that's where we're trying to be mindful that there are different ways to get to that same client and outcome without this culture impact. And so I think that's what's really important, is trying to get the right level of balance. Even when you're serving the client really well, that doesn't mean you can treat your internal team negatively. And those are probably the stickiest situations, things we're working through as far, even as far as we're into it. That's something that'll always occur, and we'll have to continue to try and renew and remind people that that's not necessarily, even though the outcome was okay, the way to get there was not. And I think that's something we're continually talking about as well. Not all outcome based. It is the process we go through to get that outcome does matter.
Yeah. No, I heard someone early in my career say, the idea of winning the sale at all costs incurs costs you can't afford to pay.
Yes.
And they don't show up immediately, but they certainly show up over time when you can hide behind, well, I closed the deal. Yeah, I left a trail of blood and tears and bodies along the way. It makes it increasingly hard to get the next sale, right? And so you need to take a pretty close look at that. I would be remiss if I didn't, move us along into the M&A discussion. So, for kind of recapping some of the breadcrumbs here, recapping them, you've been the CEO since, for about 5 years now. Is that correct?
A CEO for 2 years, but was CFO through the merger. Yes. Yep.
So you've been there for the entirety of it in an executive level role. I'm going to assume, we don't do M&A with lending institutions. It's a whole different ball of wax. But I would assume that there's some similar and some unique challenges that come with the M&A process, particularly around the post-merger work. As you look back 5 years back or a number of years back and think about the merger, what are the questions that that you reflect on now you wish you would have asked back then, or what were the key lessons you learned along the way that you think others should really keep in mind as they undertake acquisition as a vehicle for growth?
Yeah, I would say because of the cooperative nature, I talked to some of my CEO peers at other cooperatives across, whether it's agribusiness or others, and they faced a lot of the similarities. So I think it actually is a pretty good corollary there. Certainly one of the things, our current topic on culture was one of those, I wish I would have done some assessments before merger, which would have helped us identify differences faster. And so we had assumed, because the interactions with the clients and the board members were pretty similar, that our cultures would be relatively similar, but there was pretty big differences in how decisions were made across the organizations and kind of where some of the power centers were or what the cultures were in some of those instances. So doing a kind of culture audit pre-merger would have been really, really helpful to help us really move through that process post-merger. The more you know about something, the easier it is to work through. And I think that was, it may not have changed a lot of the decisions, but we would have understood where resistance may come or where clarification was needed, which would allow that process to be much, much more efficient and much smoother, I think, in the longer run. So certainly that aspect was one. I think the other part, which we talked a little bit about, is the failure of imagination of how good some things can be. When we put those organizations together, we thought it would kind of best utilize the collective talent across those three organizations. That came through in spades. We found people that wanted to do different things in different parts of the organization that have proven to be just awesome accelerators of growth that we never would have known if we'd have stayed separate. And so utilizing the collective talents of all of your people across the merged organizations is something to look for early because we really found so much value that came from that. And I think the other part of it that we learned is the scale to come through, the diversity in our earnings stream really has helped us through, what I would call the downturn from 16 to 19 and then really allowing us to be in a position to really absorb the growth that occurred from 2020 to 2022 in a really positive way. And so both, you have that culture aspect, utilizing those people and being able to recruit new people into the organization has been an amazing thing as well. I think that's where some of that scale that you create by a merged organization really is a step change in your ability to recruit because it demonstrates the mission that you have as an organization, a cooperative, helping farmers and ranchers. That's a really attractive thing in today's world. And we've been able to show them that we're a large, stable organization that has multiple opportunities for employees to advance in the organization. That has just proven to be really attractive and really helped us meet some of the goals we're looking to achieve. Yeah.
So 2 comments I will make there, Jason. Thank you for those. The idea of the kind of like almost like a pre-mortem culture assessment and identifying, and it's more than what's the feel of how meetings are conducted. I mean, you hit right on it. Where are decisions made? Do we value the inputs to outcomes or the outcomes themselves? Do we value the time someone spends in their chair at the office versus the actual results they deliver at the end of the quarter? Do we, we centralize versus distributed in our decision making? Those are the things that you kind of need to have a line of sight to. I think though it's more than just knowing the daylight between the 2 organizations or the 3 organizations in your context. The number of times that we've done some version of a pre-mortem assessment of culture. We typically work with buy-side clients. The number of times that they do the assessment and realize that even among a small leadership team, they don't have a shared sense of what their culture is.
Yep.
That's a really important variable to know going into the deal. It doesn't kill a deal, but it says, guys, look, we don't even know what our culture is. And there's going to need to be some work done, or at least acceptance of the fact that there is a distribution of perspectives on how we make decisions going into it. Because how can you truly integrate 2 organizations? And let's use a very simple example. If you say, well, we're going to bring our accounts receivable and past due collection process, and we're going to integrate it with these other companies. But you look under the hood and you realize that you actually have 3 different AP accountants, and that means you have 3 different AR processes. Mm-hmm. If you don't have a single process for how you manage past due, collections, et cetera. What are you integrating, right? You need to standardize before you integrate. And so culture is very much the same way. I think these pre-mortem assessments reveal how much variability is there in your own organization prior to getting close to another. So that's, I think, a really important aspect. I don't know if that's something you guys discovered or think you might have discovered had you done that.
Oh, absolutely. I think just the intentionality around understanding some of these things, standardize before you kind of work it forward was something we just, it was all over. And it wasn't something we were thinking about. You get so tied into the financial aspects of the mergers, and those are important, but they are ultimately likely not they're going to deliver the ultimate value, right? So culture eats strategy for breakfast. You can make the perfect acquisition, but if you don't have a culture that was accepting and ability to integrate or adaptable in a way that helps, pull those organizations together and serve clients into the future, you're just not going to be successful. So it's really important. I think as you go forward and as you look, the margins that we're operating in, whether it's your gross margin or just the margin of error, given the uncertainty and volatility that's out there, they're getting small. And so I think the need to focus on some of these things is becoming increasingly important. And it really helps those interactions. If you get it right on the front end, you spend less time trying to recover with clients or trying to recover with other stakeholders. And you can really focus on driving the business forward versus fighting fires. And I think that's definitely something we learned. I think we would do some things definitely different. We would have just even setting up policies and procedures. Like we took a lot of time doing policies and redoing policies and things because of the decision making that was happened in different organizations and where it occurred and what they were used to relative to the client service level. So there's a lot of learnings there. It's something to spend more time on than what you initially think, I think, for sure.
Yeah. One other thing I want to point to there, and you also kind of alluded to it, was the failure of imagination and recognizing that the disruptive nature of a merger and for all the imminent threats it can seem to pose for your people on either side of a transaction, it does open up a lot of really interesting opportunities to do new and different things that simply were not possible before. And we're not going to call this episode, financial models don't matter with Jase Wagner of Compeer Financial, but sometimes the model can't possibly anticipate what the accelerated opportunity might be, the aggregated opportunity. 1 + 1 doesn't equal 2 with M&A. If it did, you would never do it, or you certainly wouldn't pay a premium.
Right.
And so if you say, okay, look, if we get the culture dialed in right, and if we support our people, reflective of our culture, we support our people through a difficult transaction where they have a lot of questions and uncertainty is really high, and we authentically ask, what are the other things that we might do to improve how we serve our farmers, our member owners, serve the industry, our partners, et cetera. It can open up all kinds of things that you don't anticipate in that model.
Yep.
But it does take, that's a gut check, and that takes some fortitude to say, okay, let's sit in that uncertainty for a moment and ask questions versus trying to flail for something to hold on to and say, well, this is the direction we're going to go. So I think those two things are really important. We're at the very end here, and I want to ask you one last question, Jase, and it really builds upon, you talked about some of the uncertainty, et cetera, incumbent in M&A. We are right now, we're recording this in April of 2025. So it's been several weeks since Liberation Day, and we're not going to get into the discussion of tariffs and et cetera, because the shelf life of that content would expire before we ended the recording with all the changes. But we already had a pre-existing downturn in the ag commodity cycle. This was already a challenging time for many of the farmers in the industry, the growers, the folks that provide services and products to those folks, the people who handle the agricultural production, trade around it, physically handle it, process it, distribute it, et cetera. What is Compeer? What are the messages and maybe the advice or coaching that you all are giving to your clients and your partners during these times of stress and uncertainty? What do you hope people are thinking about and doing as a way to weather this choppy period?
Yeah, I think first and foremost is understanding your own operation and taking a moment to do that. And oftentimes we're running really hard, we're thinking about it, but we're not actually sitting and thinking about, how are we doing and where is our business at? So knowing your numbers is a great example, but knowing where your relationships are at as well. And so we're really encouraging, reach out to your banker, to your ag retailer, to whoever your key partners are, and just touch base with them. Be transparent about where you are and where you think things have risks. And I think that helps them understand, hey, they're coming forward in a transparent way. And so they're being honest with me about where they are. And so if things occur, we should expect them to continue to be honest. And that gives them confidence as you work through things. So I think for us, we're trying to do that up the chain with our partners that we're working with, whether it be technology or other banking partners, being, really open and honest about where we are and what challenges we're seeing and what we're expecting going forward. And I think if everyone can kind of do that and both know where you are, spend that time, but also try and be proactive with your relationships, make sure that your key relationships in particular are in a good spot and are functioning well. And I think if you're doing those two things well, you're going to have a lot of resilience. And that's what it takes in today's environment. Resilience is a key item. Adaptability is key, but really the other message that we have, which I think is true, should be true all the time, but maybe isn't always, is watching those pennies, right? Raindrops make an ocean. So if you're doing things that are not maybe the most efficient, try and find ways to tighten those up a little bit. I would encourage people to still continue to innovate and think about the world and where it's headed. You need to continue to be able to do that, but things that you're doing day to day that are normal, try and find those efficiencies to try and continue to keep that resilience going well into the future, because nobody knows where this downturn is, the bottom is, or where the next upside cycle is, and the ability to take advantage of that is certainly a need as well.
Yeah, I very well said around the transparency. The job is never no problems, but the job should be no surprises.
Correct.
Right. And to the extent that you can do that to your banker, to your boss, to your partner at home.
Yes. All of those things are true.
Advice applies in nearly every situation. Well, Jase, I know we're at time. I very much appreciate you joining us today and being so generous with your perspectives.
Yeah, thank you, Joe. It's a pleasure to share some of the learnings I've had. Hopefully we can pay it forward and those things can come around. But I really encourage that collaboration across this rural community and these rural aspects is something we all need, and encourage people to reach out, continue to ask questions and do things which benefit the whole here.
Yeah, well, thank you for being a great partner to the industry, a great partner to us at Moser Consulting Group, and for continuing to share the message and, as you said, pay it forward. And to our listeners, thank you for tuning in today to today's episode of the Pacesetter Pod. If this conversation was of interest and value to you today, I ask you to do one thing, and that's share it with others who you believe would also benefit. We really appreciate it, and it's the very best way you can support the show. Thanks again for joining us, and I look forward to having you again here on the Pacesetter Pod.
This is thepodcastfactory.com.